Buying a house, it's more than just a purchase. It's the beginning of something deeply personal, a space for laughter, late-night talks, birthdays, and bedtime stories. But what many don't realize, until it's almost too late, is that your credit score could make or break this dream. And so, before you step across the welcome mat of your future home, you need to take 5 powerful credit steps, ones that can shake your mortgage, your savings, and your peace of mind. Let's count them. Credit move number 5. Avoid opening new credit accounts. It's tempting, right? You're at a checkout counter or browsing online and a pop-up offers 20% off your purchase if you apply for a store card. Or maybe your phone provider waves a sleek upgrade with financing. But just before applying for a mortgage, this is a trap. Opening new credit lines adds hard inquiries to your credit report. These small hits can shave precious points off your score. Worse still, they signal to lenders that you might be financially overextended or desperate for cash, both of which can tank your mortgage application. Lenders are looking for stability, not sudden spending. A new account also shortens your average credit age, further dinging your score. Plus, it may take weeks for a new account to report correctly, which can delay the underwriting process. Even if the inquiry only lowers your score by a few points, that drop can push you below a key credit tier. That means you could miss out on better interest rates or even loan approval altogether. And remember, every point counts when it comes to qualifying for the best mortgage deals. So unless it's absolutely essential, put those card offers aside. That 20% discount isn't worth a 0.5% hike in your mortgage rate or a rejection. Credit move number 4. Keep old accounts open and maintain a healthy mix. Have an old card you haven't used in months. You might be tempted to close it, but don't. That useless card could actually be one of your credit score's best friends. Length of credit history accounts for 15% of your FICO score. The longer the account has been open and in good standing, the better it reflects on your financial reliability. Even if you don't use the card often, its presence helps your credit profile. It increases your available credit, which helps utilization and shows lenders you've managed long-term relationships responsibly. Also, credit diversity matters. Lenders want to see that you can manage both revolving credit, like credit cards, and installment loans, like auto loans or student loans. This signals that you're equipped to handle different forms of debt, crucial when taking on a mortgage. So dust off that old card, put a small bill on it monthly, and pay it off. Think of it like a trophy in your credit case, quietly boosting your score. Credit move number 3. Lower your credit utilization. Let's watch one of the most underrated credit influencers, credit utilization, how much of your available credit you're currently using. Experts recommend staying below 30% and ideally under 10% for maximum impact. If you're using too much of your credit, even with on-time payments, lenders might assume you're over-reliant on debt. It raises red flags about your ability to take on more credit responsibly. It's like preparing for a dinner party but leaving clutter everywhere. It makes lenders wonder what's hiding behind the scenes. Here's how to fix it. Start by paying down your credit card balances strategically, beginning with the ones that are closest to their limit. This helps lower your credit utilization quickly, which can significantly improve your credit score. If possible, request a credit limit increase on your existing cards. Just be sure it won't result in a hard inquiry, which could temporarily hurt your score. Also, delay any large purchases. This is not the time to splurge on that $2,000 fridge or a new entertainment system. Finally, consider making early payments before your statement closing dates. This reduces the balance that gets reported to the credit bureaus. Every percentage point you lower could translate to a lower mortgage rate. And in the long run, that could mean tens of thousands of dollars saved. Credit move number 2. Pay every single bill on time. This one's simple, but crucial. Payment history accounts for 35% of your credit score, the largest factor. And just one missed payment, even if it's just a few days late, can drag your score down by 50 to 100 points. For someone buying a home, that can be the difference between approval and denial, or a difference of $100 per month on your mortgage. Even a small utility bill or credit card payment can do serious damage if overlooked. That $40 phone bill you ignored last month, it could cost you thousands in interest over time. Set autopay, schedule reminders, and double-check due dates. In this stage of your life, no bill is too small to prioritize. Let this be your mortgage mantra. Never miss a payment. Not now. Not ever. Credit move number 1. Pull your credit reports and dispute every error. Before doing anything else, know where you stand. Pull your free credit reports from Equifax, Experian, and TransUnion. You're entitled to one free report weekly from each bureau. And then, review it line by line. Is that credit card account really yours? Is there an old loan showing late payments that you know were on time? Are there duplicates? Collections already paid? You'd be shocked how common credit report errors are. A 2023 FTC report found that 1 in 5 Americans has at least one error lowering their score. That's millions of people unknowingly paying more just because no one double-checked. Disputing is your right. The bureaus must respond to disputes within 30 to 45 days. And if corrected, your score could jump 20, 40, even 100 points in just weeks. Fixing even a small mistake can have a big impact when applying for a mortgage. An incorrect late payment or an account you don't recognize could be the difference between approval and denial. Lenders use your credit report to determine your financial reliability, so it needs to be accurate. Sometimes something as simple as a clerical error can cost you thousands in interest. And the worst part is most people never know it's there. Don't be one of them. Take action now while you still have time to improve things before meeting with a lender. It's one of the fastest ways to boost your score legally and effectively. So take the time, protect your future, and start your home buying journey with clean, accurate data. A real family unlocks the door to their dream home. Let's step away from the numbers for a second. Imagine this. A young couple with a toddler in tow walking into an open house on a sunny Saturday morning. They spent the last year budgeting, saving, and learning how credit works. They paid every bill on time. They kept their oldest cards open. They ignored new card offers even when the discounts were tempting. And when they finally applied for a mortgage, they were approved with a better rate than expected. Because they weren't just lucky. They were prepared. These 5 moves gave them more than a house. They gave them freedom, stability, and confidence in their financial future. Let's face it, credit doesn't always get the attention it deserves. It's not flashy. It's not fun to check your reports. But when you understand how it works, it becomes one of the most powerful tools in your financial arsenal. A mortgage isn't just about bricks and tiles, it's a long-term relationship. These 5 credit moves, they're not tricks. They're not shortcuts. They're stepping stones to something bigger. A clean report opens doors. A strong score earns better rates. Timely payments build lender trust. Lower utilization boosts credibility. Smart decisions lead to lifelong wins. And that key you're dreaming of holding, it's just on the other side of preparation. A house is made of wood and nails. But your home is built on planning, discipline, and credit choices that protect your future. So take these steps, take them seriously, and take that first key, knowing you've earned it. What credit moves surprise you the most? Or maybe you've got tips of your own to share? Drop your thoughts in the comments below. And don't forget to like, share, and subscribe for more actionable financial videos that empower your journey to homeownership.